Everyone, I'm Nirasha and you are watching Public Sector Economy Part 3 Public Finance. So in this video, we'll be discussing the government revenue, government expenditure, budget balances and how it is being financed. Okay, so it's nothing much to teach but for you to study. So I'll read through all the slides. Okay, so so that you can be cleared with any issues that you had. Okay, so firstly, composition of government revenue. So we are going to see first the government revenue. So in government revenue, I have given you as a percentage of the total and as a percentage of the GDP so that it is easy for you to compare. And also if you are being asked in a question, so you can make your choice whether to go with the percentage as a total or a percentage of GDP. Okay. So in 2017, tax revenue has been 91% and non-tax revenue was 9%, whereas in 2018, tax revenue was 89% and non-tax revenue is 11%. Okay. Then as a percentage of the GDP, in 2017, tax revenue was 12.4 and non-tax revenue was 1.2, where the total government revenue was only 13.6 of the GDP. And in 2018, tax revenue was 11.9 and non-tax revenue was 1.4%, which amounted to 13.3% of the total GDP. Okay. And this direct, we learned, right? Taxes, we have direct taxes and indirect taxes. In 2017, this tax revenue 12.4 was 2% direct taxes, which is income tax, and the rest 10.4% was indirect taxes. Whereas in 2011, this 11.9, 2.1% was direct taxes and 9.8% was indirect taxes. Overall position, so in 2018, our GDP was 14,450 billion. Total revenue was 1,920 billion, whereas the total revenue to GDP was 13.6. I'm sorry, 13.3%. Okay, yes, 13.3%. Okay. Then government revenue in Sri Lanka, you have tax revenue and non-tax revenue. So this is the total counts to the total of the non-tax revenue and tax revenue is 100%. Okay. So we saw here 89% was tax revenue and 11% was non-tax revenue. So that is what we are looking at here. This 89% was 25% excise duties, 24% VAT, 16% income tax, 5% import duties, and the rest 19% was other taxes. Whereas in non-tax revenue, the total 11%, fees and charges 5%, profits and dividends 2%, interest income 1%, and other was 3%. Okay. Significant features of government revenue. The total government revenue as a percentage to GDP decreased for the second consecutive year in 2018. We know, right, from 2017 it was 13.6 and in 2018 it was 13.3. Accordingly, tax revenue declined to 89% in 2018 from 91% in 2017. Contribution of non-tax revenue to total tax revenue decreased to 11%. Increased to 11% in 2018 from 9% in 2017. Here, whatever the note points that I have described is this. Okay, the points that are here only have been described. Okay, and there are few additional points for your knowledge. In the sense, you will have to remember sometimes if you are being tested on the significant features, well, outline the significant features or what are the significant features of government revenue. It can be a direct question. We never know. Okay, government revenue decreased to 13.3% in 2018 from 13.6% in 2017 due to the fall in tax revenue, irrespective of the increase in non-tax revenue. See, non-tax revenue increased, but tax revenue fell. Tax revenue as a percentage to GDP declined to 11.9% in 2018 from 12.4% in 2017. Non-tax revenue as a percentage to GDP increased to 1.4% in 2018 from 1.2% in 2017 due to the central bank profits transferred and the increase in revenue from fees and charges. In nominal terms, tax income from following taxes increased in 20. This is in nominal terms, okay? VAT, corporate and non-corporate income taxes, pay as you earn or PE tax, economic service charge, PAL, NBT, excise duty, PAL is port and airport levy, okay? NBT nations building tax, excise duty on motor vehicles, cigarettes and liquor. In nominal terms, tax income from the following has decreased in 2018. Import duties, excise duty on petroleum products, withholding tax and cess levy. Okay. Then that is about government revenue and government expenditure and net lending. So here there's a bit of a theory part which we will learn to know. This is everything. Okay, that's all. So this government expenditure you can classify based on two bases. You have the economic classification, functional classification, and you will need to know economic classification better than the functional classification. Okay, so economic classification, we classify government expenditure as current expenditure or recurrent expenditure. There is a consumption expenditure, and you have capital expenditure and net lending, which you call the investment expenditure. Okay. Current expenditure, we have three categories: expenditure on goods and services, which include payment of salaries for government workers and government sector operational expenses. Then the second one, you have interest payments, that is interest paid on local and foreign borrowings. And you have current transfers and subsidies, that is a payments made by the government to public sector organizations. Then capital expenditure and net lending, you have acquisition of real estate, which include expenditure made to acquire fixed assets. Then you have capital transfers to government departments and corporations. Then you have under expenditure provision. It includes provisions made for unexpected expenditure, and which is always zero in terms of Sri Lankan budget. Then net lending, you have include new loans granted, repayments of granted loans, and advanced account operations. Functional classification, again you have current expenditure, capital expenditure, and it's the same four terms that goes under current and capital: the general public services, social services, economic services, and other services. General public services are the services that are required or that are necessary or essential for the citizens to have a safe day-to-day orderly public life. Civil administration depends. So based on the nature of the expenditure, you can classify them as either capital or current. Okay. Then social services, those contain exceeding amount of social benefits. Education, health, economic services to make economic activities more efficient, and other services, any other service which you can't, any other government activity which you can't categorize under general public services, social service, and economic services, you call them as other services. Okay. Yes. So this is the economic classification and functional classification. And you will need to know the economic classification. Just know there is a functional classification, these are the terms, but don't go much into detail. Okay. And if you read it, feel like I can't study this, fine, leave it, but study the economic classification. Okay. Now the government expenditure in Sri Lanka, again as a percentage of the total and as a percentage of GDP. As a percentage of total, current expenditure was 75% in 2017, while capital expenditure and net lending was current expenditure was 75%, capital expenditure was 25%. Okay. In 2018, current expenditure was 78% and capital expenditure was 22%. Okay. Then as a percentage of GDP, current expenditure was 14.4%. And capital expenditure and net lending was 4.8% in 2017. And in 2018, current expenditure was 14.5% and capital expenditure and net lending was 84.2%. GDP is same, 14,450 billion. Total expenditure 2,693 billion. Total expenditure GDP ratio 18.6, 18.7, not an issue. Okay. Now composition of government current expenditure and capital expenditure. Current expenditure 2017 and 18, this is as a percentage of current tax. This is a percentage of the total, okay? Yes, percentage of total, I'm sorry. It's not a percentage of current expenditure, it's percentage of total. Capital expenditure on goods and services. I'm sorry. Yeah. Yes. Expenditure on goods and services in 2017, 38%. Interest payments in 2017, 39%. And current transfers and subsidies in 2017, 23%. Whereas in 2018, capital expenditure on goods and services 39%, interest payments 41%, current transfers and subsidies 20%. Composition of government capital expenditure 2017, acquisition of real estate 56%, capital transfers 44%. I said there is no under expenditure provision. And 2018, acquisition of real assets 60%, capital transfers 40%. Again, we are coming to the significant features. Total expenditure and net lending as a percentage to GDP declined to 18.7% in 2018 from 19.2% in 2017, mainly due to the moderation of public investment. Current expenditure as a percentage of GDP increased to 14.5% in 2018 from 14.4% in 2017. However, in nominal terms, current expenditure increased by 8.4% to rupees 2,089.7 billion in 2018 from rupees 1,927.7 billion in 2019, mainly due to the increase in interest payments. Capital expenditure and net lending as a percentage to GDP declined to 4.2% in 2018 from 4.6% in 2019. Similarly, in nominal terms, capital expenditure and net lending declined by 6.5% to rupees 603.5 billion in 2018 from 645.4 billion rupees in 2017 due to the slowdown in public investment. These things you have to memorize. I can't teach these things, right? Yeah. If you're planning to write on this, yes. If you are planning to write the essay answer, answer the essay question on this, you will have to remember this. I can't help this, no? This is in the syllabus. Okay. Now we are coming to the government budget. So this is the form of government budget. And we have 4 budget indicators: current account balance, overall budget balance, primary account balance, and net cash balance. So we are going to study what each of these 4 are separately. But before looking at those 4, we'll see format of the government budget. Okay. So first you have the government revenue, and we have the government expenditure, and then you get the budget balance. This is the government budget. Okay. This is how the format is going to be like. Now we are going to look at this indicators, budgetary indicators. Current account balance. Current account balance is the balance derived from by deducting the current expenditure or recurrent expenditure from the total government revenue. If it is a surplus, you call it government savings. If it is a deficit, you call it government is savings. You see, a simple thing which I am going to tell. Okay, try to understand this. Current account balance is total government revenue minus current expenditure. By any chance, if this was a dis-saving, which means government did not have enough money to finance its current expenditure even, that means the government will have to borrow to finance current expenditure. If the government doesn't have money to finance the current expenditure, that means it doesn't have money to finance capital expenditure at all. That means part of the current expenditure and the capital expenditure in whole should be financed through borrowings. Okay, did you understand that? So the same way opposite, if it was government savings, that means government is left with some money after spending on current expenditure, means government has some money to spend on capital expenditure. Maybe it is enough to finance all the capital expenditure, or maybe government will have to borrow to finance part of the capital expenditure. Okay. Then you have the primary account balance. That is the overall budget balance plus the interest expenditure. Okay, before coming to that, we'll see what overall budget balance is. Overall budget balance is simple. That is government revenue plus revenue and grants minus government expenditure and net lending. Okay, that is the overall budget balance. So to this overall budget balance, if you add the interest expense, that is a primary account balance. Okay. Then to the overall budget balance, if you add the capital repayment, that is the net cash balance. It's not difficult, but yes, it will take some time to process. I can understand. Okay, so current account balance is total revenue minus current expenditure. Overall budget balance is total revenue and grants minus total expenditure and net lending. Primary account balance is overall budget balance plus the interest expenditure. And net cash balance is overall budget balance plus capital repayment. Okay. Types of government budgets. See, you can have the balanced budget, deficit budget, or a surplus budget. Surplus budget is where the total revenue exceeds total expenses. There are advantages of this. First one is it is a saving on the government expenditure. Then you can invest it, no? You can make capital investments, helps economic growth. You can pay off your debts. Yeah, it can lead to tax impositions. Okay. Then balance budget is revenue equals to expenditure, but deficit is revenue is less than expenditure. Those are easy things, but surplus budget very rarely happens. So you better know the advantages. Now we are having deficit financing. Now there is a budget deficit. How are we going to finance this budget deficit is what we are going to look here. So these deficit financing sources, you can have domestic borrowings as well as foreign borrowings. So first we'll go through domestic borrowings, then we'll move to foreign borrowings. Okay. Domestic borrowings, you have market borrowings, non-market borrowings. And I want to tell you, if you borrow through the market, that you call as an expansionary source. Why? Because you either have to borrow from the if you borrow from the banking sector. Okay, under market borrowings, you have banking sector borrowings and non-banking sector borrowings. Okay, so you have domestic borrowings. Domestic borrowings, we have market borrowings and non-market borrowings. Okay, market borrowings, we have banking sector borrowings and non-banking sector borrowings. If you borrow from the banking sector, that is the commercial banks and the central bank, it will create an expansionary effect in the economy. Okay, but non-banking sector borrowings and non-market borrowings will not create that effect. Okay, so non-banking sector borrowings, you have National Savings Bank, Employee Provident Fund, Employee Trust Funds, and many other things. I'll give you examples here. And non-market borrowings, you have deposits of government institutions, deposits in courts, deposits of treasury, and some others. Foreign borrowings, it can be a foreign loan or a foreign donation. Foreign loans, you have bilateral loans, multilateral loans, and commercial loans. Bilateral loans, we have taken bilateral loans from Japan, Germany, China, and India, and you can classify them as project loans and non-project loans. Multilateral loans, we have taken from IBRD, IMF, ADB Asian Development Bank, IMF International Monetary Fund. Okay, so again, these can be classified as project loans and non-project loans. And commercial loans, those are CBSL introduced. CBSL introduced Sri Lanka development bonds to obtain commercial loans from foreign markets. There you issue Sri Lankan development bonds, or you simply call them SLDBs, to obtain commercial loans from foreign markets. Okay. Economic impacts of deficit financing. Again, this was a question if you had already done the paper. You know it. Okay. Increase in money supply. When the following, these are the expansion resources. See, these are the expansion resources. When you finance a budget deficit through these sources, money supply in the economy will increase. Government borrowing from the central bank, commercial banks, and use of foreign sources. And it will cause inflation. Money supply increases, inflation rises. Crowding out effect. This means, now what happens? The government will borrow from the local market. That means the banks does not have money to give it to the investors. Okay, therefore the private investments will go down. Banks doesn't have money and the interest rates will also increase. No, banks doesn't have money, one place, and the interest rates will rise. Okay, therefore the investments in the economy is going to go down. This is what you call as the crowding out effect. Then debtness. You are in debt to everyone. No, you will have to pay. You will have to pay your domestic sources. You will have to pay your foreign sources. And impact of balance of payment. When foreign sources are used to finance a budget deficit, balance of payment and exchange rate is getting negatively affected. Okay, so these are the economic impacts of financing budget deficit. Okay, now this is the government budget. These are actual values. Okay, these values, if you can remember better, but it's difficult, I can understand, but try to remember those. Okay, and these values, if you can remember, yes, you will be able to build up an answer if you are tested on that. Okay, so total revenue and grants 2017 1840, 2018 1932. Total revenue 1181 in 2017 and 2018 1920. Tax revenue in 2017 1670 and 2018 1712. Non-tax revenue in 2017 161 and 2018 208. Grants in 2017 is 9 and 2018 is 12. So these are in rupees billions. Okay. Total expenditure in 2017 2573, 2018 2694. Recurrent expenditure 2017 1928 and in 2018 2090. Capital expenditure 2017 638 and in 2018 613. Lending minus repayments 2017 is 7 and 2018 minus 9. Okay. Then current account balance in 2017 minus 96. Primary account balance in 2017 is 2 and budget balance is minus 733 in 2017. In 2018, current account balance is minus 170. Primary account balance is 91 and budget balance is minus 761. Okay. Now here the budgetary target achievements. In 2017, the actual percentage of GDP is given. Current account balance minus 0.7, primary account balance was 0 and budget balance was minus 5.5. In 2016, the targets were current account balance is 0.5, primary account balance 1 and budget balance minus 4.8. But actually, current account balance was minus 1.5. It was kind of a bit greater deviation. Primary account balance 0.6, just 0.4 difference, and budget balance minus 5.3, again like 5-point difference, no? Okay. Key fiscal balances in 2018. The budget deficit and primary surplus improved during the year, while the current account deficit increased marginally. The overall budget deficit as a percentage of GDP improved to 5.3% in 2018 from 5.5% in 2017, supported by the moderation of total expenditure despite a decline in revenue as a percentage of GDP. However, the budget deficit deviation from the target 4.8% envisaged in the budget 2018. Meanwhile, the primary surplus increased to 0.6%, rupees 91.4 billion rupees in 2018 from 0.02%, rupees 2.1 billion in 2017, reflecting mainly the reduction in capital expenditure during the year. However, the current account deficit increased to 1.2% in 2018 from 0.7% in 2017, reflecting slippages in the revenue collection and an overrun in recurrent expenditure, largely due to higher than estimated interest payments. You will have to study this if you're planning to write the answer. I know it's tough, but if you can remember this, it's easy, right? You will not have to draw diagrams. You don't have any calculations. It's just a matter of you remembering this. Yeah. Then financing the budget deficit in 2016. The budget deficit of rupees 761 billion was largely financed through domestic sources in 2018. Consequently, domestic sources accounted for 57.5%, rupees 437 billion of the total financing, and foreign sources accounted for 42.5%, which is 324 billion rupees. In domestic sources of financing the budget deficit, dependence on the domestic banking sector reduced significantly, while reliance on domestic non-bank sources increased substantially in 2018. Borrowings from the commercial banks decreased, while borrowings from the central bank increased. Purchase of treasury bills by the central bank entirely contributed to the net increase in borrowings from the central bank during 2018. Financing from non-bank sources accounted for 25%, which is 327.8 billion rupees of total net domestic financing in 2018. Funds mobilized through foreign sources declined in 2018 with significant outflows in foreign holdings of rupee-denominated treasury bonds and treasury bills. Now government debt indicators. This is not in the syllabus, but this is for you to understand how these values are being calculated. Okay, this is for your understanding. This is a bit of extra knowledge. Okay, so here I have given you the ratios on how to calculate each of these indicators, and here I have given you the values as well. So I will just read through. Gross and net government debt. So net government debt is the gross government debt minus repayments during the year. Okay. Government debt ratio is total debt divided by GDP into 100. Debt service ratio is interest plus capital repayment over GDP into 100. Interest payment ratio is interest payment over GDP into 100. Foreign debt ratio is total foreign debt over export income into 100. Foreign debt servicing ratio is interest plus capital on foreign debt divided by export income over 100. So if you analyze these carefully, you can see, right? If it is foreign debt, you always take it on export income. Okay. Currency composition of the government. Yes. These things you will have to remember. By any chance, if you are tested, there is a very less possibility, I will say. But by any chance, if you are tested, you will need to know these things. Okay. So LKR, that is Sri Lankan rupees, 46%, USD 32%. So this is domestic sources and this is all foreign sources. SDR 8%, Japanese yen 5%, Euro 2% and others 7%. Government debt based on debt instruments, Treasury bonds 69%, Treasury bills 12%, Sri Lankan provisional advances 3%, Sri Lanka development bonds 10% and others 6%. Indicators, government debt ratio 2017, 76.9%, 2018 82.9%. Debt service ratio 2017 11.9, 2018 14.5. Interest payment ratio 2017 5.5, 2018 5.9%. Foreign debt ratio 2017 162.2%, 2018 181%. Foreign debt service ratio 2017 13.4% and 2018 16%. Okay. Now we are coming to government enterprises. Engaging of production and distribution of goods and services by the government through government departments, corporations and companies. This is something like common sense for you. Okay. Government enterprises is whatever is owned by the government, government enterprises. Why do we need government enterprises? Why government enterprises fall? How we are going to restructure government enterprises? And what are the benefits of restructuring government enterprises? These are the only things that you will need to know. Okay. Why government enterprises? Failure of private sector to supply certain goods. We know, right? Public goods, private sector doesn't supply. Merit goods, undersupply. Yes. To avoid private sector monopoly. Fair enough. To increase efficiency of private sector. Government sector can compete, no? To control price, to achieve full employment, then to gain an income. So these are the reasons for the existence of government enterprises. Why? But we see government enterprises fail, and these are the reasons. More like the same reasons for government failure, we'll see. Unrealistic pricing policy, overemployment. You walk into a government, you walk into a government office, you will see, right? Like employees are there, but they don't have really jobs. Less accountability, non-profit objective, imperfect information, centralized decision making. Then how are we going to restructure this? You can go for privatization. You can remove political interferences. You can do liquidation, subsidies can be removed. You can change the objective for profit. You can allow the market to decide price. Yeah, you can have set of proper authorities. Yes, so that you're accountable for someone for your actions. Then benefits of restructuring government enterprises. You can make innovations, increase in allocative efficiency, increase competition and efficacy or efficiency. You can say increase in production efficiency, gain an income to the government, reduce budget pressure. So yes, this is not much in detail, just in point form. You can do much digging into this because these information are pretty much available everywhere. Okay, so study this. Okay, study this lesson. Some of you might find this lesson difficult. Some of you might find this lesson easy. So for those of you who find this lesson difficult, put a bit of effort. I know remembering values, remembering all those percentages without getting mixed up or messed up in your head is not easy. But give it a try. Sometimes it might work for you. But studying these numbers is not for you. Then give up this lesson. Study the lesson for the MCQ paper, but not for the essay paper. There are so many easy lessons out of which you can choose. For an example, if you take the money and banking lesson, if you know to do those sums and bit of theory, you know you can tackle that question. Okay, so but if this lesson is for you, if you are getting prepared for this lesson, I will tell you, I will make sure that you will get that document as well. Go through Central Bank Annual Report 2018, the chapter with regard to the fiscal policy. Okay, you will find that I also have if you go through that, you will find that I also have taken so much information from that. I have given the sources as well in the presentation. So go through that. I will try to send that to you guys. So yes, study this lesson, do the questions, and there are few areas. There were small things where the privatization, what on account, privatization advantages, disadvantages, advance accounts, which I have not covered in this. Most of the things that I have covered in the paper. So don't worry, study this lesson. If you're going to study this for essay paper, take more time, study the numbers. You might get a question from the numbers for 6 marks or 4 marks, but sometimes you might not get anything at all. Okay, so study. I know this requires a bit of effort, bit of hard work. Every lesson does, but this you have to deal with numbers, and you can't predict the questions that you're going to get from this area. That is why I'm telling you, if you are going to get yourself prepared for this, go through that chapter in the annual report because it is going to help you a lot. Okay, so thank you so much, guys. Study well and good luck.